Our C-suite barometer was launched about a month ago. 93% of those who responded were optimistic about the future, but this was then. Since the past month, the world has changed dramatically, and we're not talking about a cyclical change, we're talking about a secular change. Essentially, the United States has departed from a global trading, economic and financial system itself has created and supported over decades, and we are now seeking a new paradigm. And because the United States and the dollar and the US Treasury were so central to this, businesses are trying to understand what this new landscape will look like and how they can best adapt to it. So the theme of increased competition and businesses needing to get an edge on that competition is possibly more relevant now than it has ever been. The AI theme is a generational theme, and it will continue to preoccupy businesses for a very long time. Talent retention and acquisition in an age of aging demographics and in an age of very rapid technological expansion is also a key issue that will remain very important for business leaders. Now, because of the tariffs in the US, companies will seek to sell their products and services to more markets. So international expansion, I would argue, will become even more central. Markets hate uncertainty. This market uncertainty will last. The valuations of companies are going to be impacted. The ability of companies to redeploy their supply chains is going to be assessed by markets. So we're going to see rotations within the financial market. The traditionally safe assets, the dollar and the US Treasury, are now being reconsidered as such. So these are very, very big and long-term themes. They're not going to go away anytime soon. Every country in the world is impacted. No one can run away from this. It's not just the 10% tariffs or the 20 or the 30 or the 40% tariffs. After a point, they become a meaningless number. The point here is that this will bring back a global trading system that was bringing down costs and increasing growth for a very long time. And this will have global economic repercussions in terms, at the very least, of slower growth. Leaders need to think more creatively about where they're going to expand and how. Now the global scene is reset, so they need a very careful reading of that global scene, and they need to figure out for them which markets work best. And they need to be creative in the sense that they have to think of markets they might have not thought of before. One thing C-suite should be doing right now is not panicking. There are going to be winners and losers. So the question that should be permeating those discussions is, how are we going to be on the winning side? Businesses should be ready to operate in different environments, and more important, they should be ready to accept business from sources they haven't previously cultivated. Supply chains are of the utmost importance here, and they need to consider their cost, because a hit to growth will probably impact their margins. So they need to consider costs, and they need to consider how they can implement AI to trim costs now. They would also need to consider financial leverage and their whole financial position. This is a world where future rates are very unpredictable. So it's a big question whether you want long-term debt or whether you have long-term debt. If we are in an inflationary world, that's a good thing. But if we go into a deflationary world, holding long-term debt is actually a very bad thing. And there are those business decisions and those capital structure decisions that are going to be made by CEOs and CFOs that will honestly impact the viability of their business for a very long time. Every business should conduct a stress test, or they should hire advisors to help them do that. The other thing they must do is they must step up their efforts to harness technology. And these are the main points I would stress. This is resetting the environment, and it's going to be painful in the overall, but that does not mean that companies that are smart about this cannot emerge as the winners. The base case scenario is one of sluggish growth and unpredictable inflation, which will also mean, in terms of macroprudential policy, it will mean higher interest rates. And possibly it could even mean lower regulation. Lower regulation will be the key to unlock some growth. So this is what the macroeconomic environment looks like in the next few months to possibly a couple of years. What I would expect from businesses is less tactics and more strategy. But we have to understand that we live in a world where now things change very quickly. You need a long-term strategic approach for a very volatile and multipolar world.